This is your LMAX Exchange technical update for Monday, July 17th, 2017. Euro dollar. So the euro is pushed up into a critical resistance zone into the 115 to 117 area, and the market should be looking to stall out over the coming sessions with the price pushing up and daily studies starting to look a little bit extended. Overall, the question right now is whether this push that we're seeing in 2017 will lead to a more significant structural shift in the euro, with the market basing out in 2017 off plus 14-year lows at 103.41 and potentially at risk for piercing this 117 resistance that we had seen back in 2015, which would suggest that the market is putting in a longer term bottom and could open the door for significant upside in the euro over the medium and longer term. Or at the same time, is the market stalling out or prepared to stall out or getting ready to stall out here into this range resistance and adherence of this range trade that we've seen going back to 2015. So that's where we're at right now. The euro has seen a very nice uptrend in 2017, but isn't coming up into this 115 to 117 resistance, where we could see the market at a minimum over a shorter period of time in the days ahead start to stall out up above 115, maybe in the 115.70 measured move extension area that we're targeting. But ultimately now on a shorter term basis, the market would need to see a break back below 113.11, 113.13, a weekly low that we had seen from a couple of weeks back at 113.13 to take the immediate pressure off the top side. Sterling dollar. So cable is finally broken out to a fresh 2017 high after it had tried several days back but failed to do so, breaking now above that 2017 high that was in place from May at 130.48 and clearing that psychological barrier at 131 in Friday trade. This sets up the possibility for an extension and an acceleration now towards the next key measured move extension at 135 in the days ahead. But at the same time, it'll be interesting to see how the market responds above 130.50 after breaking above that 2017 high. And we could just as easily see the market stall out and see some more choppy consolidation before the market actually looks to make that ascent up towards 135. But clearly the overall structure here has been shifting since the breakout that we had seen back in April above 27.75 range resistance off of that plus 30-year low from October of 2016 at 118.40. And the overall outlook now is much more constructive for cable going forward, with setbacks expected to be supported ahead of fresh upside. Dollar yen. So dollar yen is once again stalled out into rallies, and we've seen pretty much since going back to early 2017 the market well capped on rallies up towards the 114 to 115 area, and so there is risk now for the market to roll back over for a test or a retest or coming close to that 2017 low just shy of 108. At this point it would take the establishment back above a high going back to March 10th of 2017 around 115.50 to suggest that the market is looking to push higher and to suggest that a more significant bullish resumption is underway. Until then, there is risk to the downside here, and right now risk for a continuation of declines back towards that 2017 low. Euro Swiss. So Euro Swiss's ability to break above 110 in the previous week was significant and now sets the stage for a retest of a critical high here from the 2016 high at 112. At this point, it would take a breakdown back below, at a minimum, a breakdown back below the 109.23 area, 109.25 to take the immediate pressure off the top side. Aussie dollar. So Aussie is starting to get interesting here. This is the weekly chart, and if you look at Aussie coming up to 78, you can see that the 78 area has been a significant resistance point going back to 2015. We have a 2016 high that was in place at 78.35, and that's kind of where the market closed out in Friday trade. So once again, it'll be interesting to see how Aussie responds with its latest break of resistance and its move to fresh 2017 highs. There's also some resistance going back to 2015 from June at 78.50. So a lot of good resistance up here, but as you can see also here, there is this idea or possibility that the market's putting in a longer term base and is getting ready to race higher over the medium and longer term. So right now the focus is on how the market responds on a shorter term basis above 78. And if we do in fact see the market stall out again in favor of a continued consolidation in this market that we've seen over the past few years. Dollar CAD. So dollar CAD has extended its declines to fresh 2017 lows and is now focused on retesting the 2016 low for this market at 24.61. Daily studies here are tremendously overextended to the downside. So if we do see the market get down close to this 24.60 area, it could be a formidable level to be looking to fade the weakness in anticipation of a resumption of the upside. But right now, again, with daily studies highly oversold, the market could reverse at any moment, but there is still risk for the market to come back down and test this 2016 low at 24.61. Right now, we need to see a break all the way back above 30.15 to take the immediate pressure off the downside. Kiwi dollar. So the New Zealand dollar is traded up into some significant resistance, with the market coming up towards a retest of that 73.76 2017 high that was set back in the month of February of 2017. But as you can see here, resistance is very well capped. Rallies have been very well capped up towards the 74 to 75 area on a medium to longer term basis. And so there is risk that the market once again stalls out in this area in favor of a resumption of declines. Ultimately, though, we need to see this market back below some support at around 72 to take the immediate pressure off the top side. SPX 500. So as we've warned in recent updates, while the market holds above 2400, the structure was continuing to favor the top side, and although there was some potential signs of exhaustion, the market was never able to break back down below 2400, and this has seen the market push higher, and this has seen a bullish consolidation, with the market pushing to fresh record highs again on Friday, and looking like it's ready for that move towards that next measured move extension at 2480 further up. This is a market that's been in an intense uptrend for the past several years, and so the possibility of a significant reversal is there. But right now, again, at a minimum, we need to see the market close back below 2400 to potentially take the pressure off the top side and potentially set the stage for a more significant structural shift. Gold. So gold had seen a breakdown over the past several days that led to a break of a previous higher low at 1214, but we had said that the market could still be supported around here and wanted to see how the market would respond. And so this latest ability for the market to be supported on dips ahead of 1200, followed by the Friday break back above 1230, does suggest that we could see this longer term basing continue to play out, with the market pushing back up now towards a retest of the 2017 high just shy of 1300, which would open the door for a push up towards the 2016 high at 1375 further up.